In the world of finance, there are gamblers, there are risk takers, and then there is Michael Saylor. Imagine walking into a casino, walking up to the roulette wheel, and putting your entire life savings on black. That's bold. Now, imagine borrowing money from every bank in town to double that bet. That's reckless. Now, imagine you convince thousands of other people to mortgage their houses so you can bet their money on black too. And then, just for good measure, you announce to the entire casino that you will never, ever take your chips off the table, even if the wheel starts spinning in reverse. For the last 5 years, Michael Saylor has been playing the highest stakes game in corporate history. He took a boring, dying software company and strapped it to the back of a financial rocket ship called Bitcoin. And for a while, he looked like a genius. But right now, as I speak to you in February 2026, the wheel has stopped spinning, and the ball is bouncing dangerously close to red. Bitcoin has crashed. It's down 50% from its highs. For the first time in years, Michael Saylor is underwater. His company, MicroStrategy, is sitting on billions of dollars in unrealized losses. The stock is plummeting. The infinite money glitch that made him a god to the crypto faithful has jammed. Experts are calling it a reflexivity trap, a death spiral. They say he hasn't just built a company, he's built a bomb loaded with over $50 billion worth of Bitcoin and billions in debt. And if it explodes, it won't just take down Michael Saylor, it could take down the entire crypto market with him. So is Michael Saylor the smartest man in the room, destined to become the first trillionaire? Or is he just a modern-day Icarus who flew too close to the digital sun? To understand the ending of this story, we have to go back to the beginning, because the crazy part is, Michael Saylor has blown himself up before. Welcome to the insane history of MicroStrategy. Most people think Michael Saylor's story begins with Bitcoin, but that is actually the second act of this movie. The first act is arguably even crazier. Michael Saylor was born to be a rocket scientist. Literally. He went to MIT on an Air Force scholarship, double majoring in aeronautics and the history of science. He wanted to be a fighter pilot. He wanted to go to the stars, but a medical condition grounded him. He couldn't fly jets. So he decided to fly a corporation instead. In 1989, at the age of 24, he founded MicroStrategy. The idea was brilliant. Data mining, using software to help big companies like McDonald's analyze their sales data to figure out which promotions were working. It wasn't sexy, but it was incredibly profitable. Throughout the 90s, MicroStrategy was a machine. It grew and grew. And when the dot-com boom hit in the late 90s, Saylor was perfectly positioned. He took the company public in 1998 and the stock went parabolic. By early 2000, Michael Saylor was on the cover of magazines. He was named the wealthiest man in Washington, D.C., worth over $7 billion. He was throwing lavish parties, talking about saving the world with information, and comparing the importance of his software to the invention of the printing press. He had the world at his feet. He was the golden boy of the tech bubble, but beneath the surface, there was a problem. You see, Wall Street loves growth, and Michael Saylor was obsessed with giving them growth. But sometimes when you're obsessed with the destination, you start to cut corners on the journey. On March 20th, 2000, the truth came out. MicroStrategy announced that it had overstated its revenues and earnings for the previous 2 years. Basically, they were counting money they hadn't actually earned yet to make their quarterly numbers look better. The reaction was instantaneous, and it was violent. In a single day, March 20th, 2000, MicroStrategy stock crashed by 62%. Michael Saylor personally lost $6 billion in net worth in one day. Let me repeat that. He lost $6 billion between breakfast and dinner. At the time, it was the largest single-day personal financial loss in human history. Imagine waking up a multi-billionaire and going to bed wondering if your company is going to survive the week. The SEC descended on him. They charged him with fraud. They alleged that the company had materially overstated its earnings to pump the stock. Now, usually this is the part of the story where the CEO goes to jail or gets banned from the industry or fades away into obscurity. But Michael Saylor is different. He settled with the SEC. He paid millions in fines, $8.3 million personally to be exact, without admitting or denying guilt. It was a slap on the wrist compared to the billions he had lost. But he kept his company. He stayed on as CEO, however, the damage was done. MicroStrategy stock, which had traded as high as $333, fell all the way down to 50 cents, from $333 to 50 cents, a 99.9% collapse. For the next 20 years, Michael Saylor became a ghost. He was the guy who used to be rich, the guy who blew it. MicroStrategy became a zombie company, a boring, slow-growth enterprise software business that nobody cared about. It made a little money, it had some cash in the bank, but it was irrelevant. Saylor spent those 20 years in the wilderness. He bought yachts. He lived a life of quiet luxury. But he was bored. You can see it in the interviews from that era. He's a rocket scientist stuck driving a minivan. And then came 2020. The pandemic hit. Governments started printing money at a rate we had never seen before. The Federal Reserve balance sheet exploded. Inflation fears were rampant. And Michael Saylor looked at his company's bank account. MicroStrategy had about $500 million in cash sitting there, just sitting there. And in his mind, that cash was an ice cube melting in the sun. If inflation was 5% or 10%, his company was losing $50 million a year just by doing nothing. He needed a solution. He needed a hedge. He looked at gold. He looked at real estate. He looked at tech stocks. And then he fell down the rabbit hole. Michael Saylor discovered Bitcoin. Now, keep in mind, in 2013, Saylor had tweeted that Bitcoin's days were numbered and it would suffer the same fate as online gambling. He was a skeptic, but when he converts hard. In August 2020, MicroStrategy announced it had purchased $250 million worth of Bitcoin. At the time, people thought it was a quirky PR stunt, a desperate move by a fading tech CEO to get some headlines. But Saylor wasn't done. He bought more and more and more. He didn't just buy Bitcoin with the company's cash. He started borrowing money to buy it. He issued corporate debt, junk bonds, to buy digital coins. He transformed MicroStrategy from a software company into a Bitcoin treasury. He famously said, "My company is a software company in the front and a Bitcoin hedge fund in the back." And for a while, it worked. It worked spectacularly. As Bitcoin went from $10,000 to $60,000 in 2021, MicroStrategy stock woke up from its 20-year coma. It soared. Saylor looked like a visionary. He was hailed as the Giga Chad of crypto. He had laser eyes on his Twitter profile. He was telling anyone who would listen to mortgage their house and buy Bitcoin. But Saylor wasn't just buying Bitcoin. He was engineering something much more complex. He was building what critics call an infinite money glitch. And this is where the story gets technical and terrifying. So, how does the glitch work? It relies on something called convertible bonds and a theory called reflexivity. Here is the simple version. Step 1. MicroStrategy issues a convertible bond. This is a loan. Investors give Saylor $1 billion. In exchange, Saylor pays them a tiny amount of interest, sometimes practically zero. Why would investors lend money for zero interest? Because the bond is convertible. If MicroStrategy's stock price goes up to a certain level, the investors can swap the bond for stock and make a huge profit. Step 2. Saylor takes that $1 billion and buys Bitcoin. Step 3. Because MicroStrategy is buying billions of dollars of Bitcoin, the price of Bitcoin goes up. Step 4. Because MicroStrategy owns so much Bitcoin, when Bitcoin goes up, MicroStrategy's stock price goes up. Step 5. Because the stock price is up, the investors are happy and the market is willing to lend Saylor more money. Step 6. Repeat. Step 1. Do you see the loop? Borrow money, buy Bitcoin, stock goes up, borrow more money, buy more Bitcoin. It's a flywheel, a self-reinforcing cycle. George Soros calls this reflexivity. The higher the price goes, the easier it is to push it even higher. Saylor used this machine to accumulate a staggering amount of Bitcoin. As of February 2026, MicroStrategy holds over 714,000 Bitcoin. That is more than 3% of the entire supply that will ever exist. To put that in perspective, that is more than the United States government, more than any other corporation. He is the whale of whales, and the market loved it. In fact, the market loved it too much. Investors started paying a premium for MicroStrategy stock. At the peak of the mania, people were paying $2 or even $3 for every $1 of Bitcoin MicroStrategy held. Why? Because they wanted exposure to Saylor's leverage. They wanted in on the glitch. This premium allowed Saylor to do something even crazier. He started issuing stock to buy Bitcoin. Think about the math here. If your stock is trading at 2x the value of your assets, you can print $200 million worth of stock, buy $100 million worth of Bitcoin, and somehow the value per share for your existing shareholders actually goes up. It was magic. It was alchemy. It was the infinite money glitch. But there is a catch. Reflexivity works in both directions. The same loop that sends you to the moon can drill you straight into the earth. If Bitcoin stops going up, the machine stalls. If Bitcoin starts going down, the machine reverses. And right now, in February 2026, the machine is reversing. Let's look at the situation today. Bitcoin has dropped from its all-time high of over $120,000 down to the $60,000 range. MicroStrategy's average cost per Bitcoin is around $76,000. That means for the first time in a long time, Michael Saylor is underwater. He has spent roughly $54 billion to buy assets that are now worth less than $50 billion. That is a $4 billion hole. But the hole isn't the problem. The problem is the debt. The common narrative, and you'll see this in headlines, is that Saylor has borrowed $40 billion. That's not quite accurate, but the reality is complicated enough. MicroStrategy has about $8.2 billion in convertible debt, plus they have billions more in preferred stock obligations. The total fixed obligations are over $10 billion. Now, Saylor will tell you, and he has said this many times, that he has diamond hands. He will tell you that the debt is not collateralized by the Bitcoin. This is a crucial point. If you take out a mortgage to buy a house and the house value crashes, the bank can take the house. That's collateral. Saylor's genius was that he convinced lenders to give him money without pledging the Bitcoin as direct collateral. So technically, if Bitcoin goes to 20,000 tomorrow, no bank can call him up and force him to sell the Bitcoin immediately. There is no margin call in the traditional sense. However, that doesn't mean he's safe, because the infinite money glitch relied on his stock trading at a premium. Remember that 2x premium? It's gone. As of this week, MicroStrategy stock is trading at a discount to its Bitcoin holdings. The NAV, net asset value, is below 1.0. This is catastrophic for his strategy. It means he can no longer issue stock to buy Bitcoin without hurting his shareholders. The engine has run out of fuel, and while the banks can't force him to sell today, the clock is ticking. Those bonds he issued, they have maturity dates. The first big wave of potential repayments hits in 2027 and 2028. If Bitcoin is still down in 2028, bondholders are going to want their money back in cash. They won't want the stock because the stock will be worthless. Does MicroStrategy have $2 billion in cash lying around? No. They spent it all on Bitcoin. So how do you pay back $2 billion when you have no cash? You have to sell the Bitcoin. And if MicroStrategy, the biggest holder in the world, starts selling, the market crashes, which lowers the price of Bitcoin, which makes MicroStrategy stock fall further, which makes it harder to raise money, which forces them to sell more Bitcoin. This is the death spiral, the reflexivity trap, and Michael Saylor knows this. He's a student of history. He knows about the Hunt brothers. In 1980, the Hunt brothers tried to corner the silver market. They used massive leverage to buy up all the silver in the world. They drove the price from $6 to $50. They thought they were geniuses. They thought silver was the ultimate hedge against inflation. Does that sound familiar? But when the regulators changed the rules and the price started to slip, the leverage crushed them. They went bankrupt. They lost everything. Is Michael Saylor the Hunt brothers of the digital age? Or is he something else? This brings us to the cult of personality. To pull off a gamble this big, you need more than just money. You need believers. You need to be a messiah. We've seen this movie before. Adam Neumann at WeWork didn't just sell office space. He sold elevating the world's consciousness. He convinced SoftBank to give him billions based on pure charisma. Sam Bankman-Fried didn't just run a crypto exchange. He was an effective altruist saving the world. He convinced everyone he was the JP Morgan of crypto. Michael Saylor has cultivated an image that is almost religious. He speaks in sermons. He calls Bitcoin a swarm of cyber hornets serving the goddess of wisdom. He calls it thermodynamically sound money. There is no second best. He has convinced a legion of followers, the laser eyes, that he is leading them to the promised land. But there is a dark side to this conviction. When you believe you are on a holy mission, you stop looking at the risks. You start to believe your own hype. And Saylor has a history of playing fast and loose with the rules. Remember the SEC fraud in 2000? Well, it happened again. In 2024, Saylor settled a massive tax fraud case with the District of Columbia for $40 million. For over a decade, he had been living in DC while pretending to live in Florida to avoid paying taxes. He even bragged about it to friends. This is a man who believes the rules don't apply to him. A man who has blown up spectacularly once, committed tax fraud, and is now betting the GDP of a small country on a volatile digital asset. But here is the twist. The thing that makes this story so fascinating, unlike Adam Neumann, who was selling a fundamentally broken business model, Michael Saylor isn't hiding anything. The Bitcoin is there. We can see it on the blockchain. The debt is public. It's in the SEC filings. He is telling us exactly what he is doing. He is saying, I am betting everything on Bitcoin. If it goes to zero, we go to zero. If it goes to 1 million, we rule the world. It is the most transparent gamble in history. And that brings us to the present moment, February 2026. The pressure is mounting. In Q4 of 2025, MicroStrategy reported a net loss of $12.4 billion. Sure, a lot of that is paper losses because of accounting rules, but 12 billion is a staggering number. Wall Street is getting nervous. Analysts are downgrading the stock. The premium has turned into a discount. The sharks are circling. Short sellers are piling in, betting that the death spiral has already begun. Saylor is putting on a brave face. He's tweeting about diamond hands. He's saying that volatility is just vitality, but the math is cold, and the math doesn't care about your philosophy. If Bitcoin stays below 76,000, MicroStrategy is a zombie. If it drops to 40,000 or 30,000, the bond maturities in 2027 and 2028 become an existential threat. And if it drops to 15,000, the game is over. But what if he's right? What if this is just a bear trap? What if Bitcoin rebounds? What if it goes to 150,000, 200,000? If that happens, Saylor's leverage works in reverse. The stock will 10x. The debt will look like pocket change. He will be hailed as the greatest investor of all time. He will be the richest man in history. That is the binary outcome. There is no middle ground anymore. He has burned the boats. He has destroyed the bridges. He is either going to Valhalla or he is going to zero. And the scary part is, because he holds 3% of all Bitcoin, he has tied your fate to his. If you own crypto, you are sitting in the passenger seat of Michael Saylor's car, and he is driving 200 miles per hour with the brakes cut. So as we watch the charts in February 2026, holding our breath, we have to ask ourselves, is this the story of a visionary who saw the future before anyone else? Or is it the story of a gambler who didn't know when to walk away from the table? History is written by the victors, and right now, the coin is still spinning. This has been the insane history of Michael Saylor's gamble. If you enjoyed this, like and subscribe for more. Cheers.